Okay, so now let's go to fundamental analysis. What is fundamental analysis? So you probably are familiar with fundamental analysis for stocks. So how do we apply this towards crypto? So for us, fundamental analysis is basically looking at the fundamentals of a project. So we have basically initial questions that we ask ourselves, because some questions are a deal breaker. Right? So for example, if the token supply is centralized, deal breaker. Doesn't matter what the fundamentals are, not ideal to get in, because the centralized people, the entities, the early insiders will basically dump on you, right? For example, XRP. I'm sorry, XRP Army. Don't kill me now, right? But basically, if you have a token, a project that has 70% of the supply being owned by the team, and only 30% of the community owns the supply, it's not a decentralized project, right? So by definition, for a project to be decentralized, more than 50% of the supply has to be in the hands of the community. And what do we define as the community? We define that as the general public, basically non-VCs, so basically retail investors, and being anybody that can buy that asset on exchanges. So let me get some examples of projects. So in this case, so for example, Matic, right? Matic has basically 6.8 billion tokens circulating, total supply 10 billion. So basically 68% is on exchanges, or can be bought on exchanges. So this is a community-owned project, essentially, right? And we said the same thing with RMRK somewhere. RMRK, this is a very decentralized project, right? So 9.5, so 95% of the token is trading on exchanges. So there aren't really any insiders, and that's huge, right? If we go to XRP, for example, right, we have 47 billion and 100 million total supply. So only 47%. So this is a centralized coin. Now, you can't make money on centralized coins if you're trading it. But in terms of long-term investing, long-term value investing, I mean, basically the team can sell tokens and dump the market price whenever they like, right? Insiders can do it, right? And that is a deal breaker to me. So as I'm building a portfolio, I don't like to have coins in my portfolio. This is if I'm building a long-term portfolio where 50% of the coin is owned by insiders. Ideally, the community should own it, because this also makes it possibly a security and tougher to get listed on exchanges. And this at times is also called Ponzi-nomics, right? Where projects will launch. Let me see what example project has Ponzi-nomics. Give me, I think ICP. So we have, like, ICP wasn't so bad. Was it Casper Labs? Casper Network? Yeah, so basically 30% of the supply, so 2.9, basically about 3 billion is in supply circulating, and 10.5 billion. So while this had great technology, when it launched, I knew that this would not really do well. All right. If we go to, I'm actually use CoinMarket. Our charts aren't that good. Let me use Casper on CoinGecko here. Right. So even though Casper Network had great technology, it scored like an 88, 89, I believe. And most of the supply was owned by insiders. And to me, that was a deal breaker despite having great technology. So that told me insiders will have to dump to take profits, and there's so much selling pressure, the price will go down. So as a value investor, you find a great product with great reviews, great ratings, and you wait until it's undervalued. So when it launched, it was overvalued, meaning that now's not the good time to get in. does not mean never invest. It just means wait until it's undervalued. And if you look at this, from all-time high, it is down 90%. So if anything, we textbook call this in a way. Right, so it launched $1.33 and boom. And if anything, I would not touch Casper Network until, if anything, circulating supply crosses 50% or more. Despite having great technology, I want this to really be owned by the community. That way the community has most of the tokens on exchanges, and there won't be so much selling pressure on the token, which means that there's not enough pressure to cause a large correction or crash. So these are other factors, the fundamentals you have to factor into, besides just finding a great project, right? So because great projects can have bad tokenomics and basically token economics and just wreck you in crypto. So looking at this, even though the price has crashed, now's not a good time to get in. And essentially, that's one element of fundamentals, basically tokenomics, right? The initial question I look for is this a centralized coin or decentralized coin? If it's decentralized, that's good. If it's centralized, not good to even get in. Then market standing, liquidity. We covered liquidity. Market standing, so we look at the team's background. You want to find projects that have great teams, obviously. But how do you objectively measure that? The factors I like to use, I like to have projects that have public founders that are, you can invest in anonymous projects or founders, but that's more challenging, more likely to get rug pulled. So one element of avoiding a rug pull is not to invest in anonymous founders, especially pre-liquidity. Basically, don't do private sales, meaning buying a token before it's liquid or trading on exchanges. If it's an anonymous founder, that's tough, right? If anything, I actually learned that lesson through Integral. Going back, I probably would not have done that. But anyway, want to make sure the team is public, their background, they've worked for well-known companies. So for us, our threshold is, have they worked for a publicly traded company? For example, like Amazon or Google or Facebook. You want basically social signals of success. But we try to make it more objective or data-driven by saying the company has to be publicly traded or worth more than $1 billion. So that for us checks the box. And ideally, you want to have more than 3 people on the team or more, right, who have worked for well-known companies for more than 2 years, right? So for example, if a product is being launched by a Facebook engineer who did blockchain at Facebook for like 2 years, that's pretty good. That's a good vote of confidence on that project and that person. And if you have several people like that, for example, Facebook's Libra coin, part of the dev team left and is now forming their own project. They raised money recently from some VCs, and that to me is a good sign, right? Because they come from a good pedigree. So if anything, pedigree is what you're looking for. Yes, it's not fair, but losing money is not fair either, right? So I want to limit losing money as well. And for me, looking for people who've done that, people who've had success. So for example, founders who've had past exits, that's a great vote of confidence. So for example, founders who've had a past exit for $50 million or more, or $100 million or more, probably in this market cycle, to me, that's a good vote of confidence. For example, Alex Mashinsky, CEO of Celsius. We rated Celsius highly back in 2018 because he's taken 3 companies public, I believe, that have had over $1 billion valuation. So like he's an all-star basically. So for teams, we're looking for all-star teams that we're willing to bet our money on based on their past success. We're not in the business of giving benefit of the doubt when it comes to teams in crypto, right? If anything, we have to verify and then trust, right? Then liquidity, we talked about. Reputation, have they been covered in well-known publications? For example, like Bloomberg, CNN, Wall Street Journal, right? They typically also go through and do their own due diligence. Have they been backed by well-known VCs? So a good list of VCs we respect in the industry: Multicoin Capital, Coinbase Ventures, A16Z. I think for me, those are the good ones. I mean, we have a longer list, but in terms of the best, Multicoin. Now we'll also be launching our own VC fund, our own fund, TM Ventures, Token Metrics Ventures, but that's launching in a month or so, or early January. But yeah, I mean, because VCs do have their own due diligence process, and by having that helps remove the elements of risk. Now you also want to add your own diligence process. You don't want to just blindly trust VCs, but it is a good threshold if a project has been able to pass the screening of Coinbase Ventures, for example, right? Then marketing development, how big is their community? Ideally, you want to have projects that have a great community. Projects with no community don't typically do well in crypto. So community sizes vary, but whether Telegram, Discord, I think Telegram and Discord are the best avenues to measure community size. So you want to see a community that's actively growing. Actually, I do have this on Token Metrics. Let me see if I can. Like, for example, if we go to Binance, yeah, so for example, right, Binance, right? So this is Binance's community. Reddit, we have comments per hour. So just go to any coin, then at the bottom, go to social tab. This shows you the average accounts active on Reddit, Twitter followers, right? So these metrics are pretty helpful, right? Because in crypto, you always want to look at the actual engagement, because so many scams in crypto, man, don't take that out. So, I mean, it's been known for products to just buy or have fake followers on Twitter, on Reddit, on Telegram, even Discord, right? So for example, if a project claims to have 100,000 people in their Telegram group, but you go and see the actual posts per hour, aren't that engaging, or they're lower than a project that has a tenth the size, then you know that they're bots, right? Or the community is not highly engaged. Sometimes it could be real people, but they're only in the group for a free airdrop. Once they get the airdrop, they left, right? Or they aren't that active. So you want to look at actively engaged community. So that's one other element you want to factor into your fundamental analysis. And then scarcity, right? So scarcity, scarcity talks about basically the supply. And at a high level, that's really fundamental analysis, right? Basically, you're trying to find the tokenomics, right? Is it centralized or decentralized? Are there good social signals? Basically, are there votes of confidence? Are they backed by well-known VCs, well-known publications in the media? Is a team member, are the team members public? Do they have a past successful track record? That's what you're looking for when it comes to fundamental analysis.